So let's get started on the statement of financial position. That is our next topic that we'll be talking about. It's under our money management unit. There's 3 parts under money management. We have the statement of financial position. Right here, I'm going to be going through the PowerPoint. The note-taking guide is right here, and you'll also need Tori's statement of financial position. Part 2 is the income and expense statement, which we'll cover after the statement of financial position. That will also have a note-taking guide and some information for you. And then the spending plan PowerPoint and then information from there. So let's get started. What is a statement of financial position, you might be wondering. Let's start with this question. Who's wealthier, Ian or Mitchell? Ian, his income is $30,000, which means that that's how much money he makes per year. Mitchell makes $85,000 per year. So you can obviously tell who makes more money per year. Ian's net worth is $50,000 and Mitchell's is $35,000. So when you look at these numbers, who is wealthier? That's what we'll talk about as we continue with this presentation. So we need to learn more. Net worth equals wealth, and net worth is the measure of financial wealth. That's the definition. Wealth indicates the monetary value of all possessions that a person or household owns minus the total amount owed to others. Net worth versus income. Now we can go back to Ian and Mitchell. It depends on how a person manages their income will depend on their net worth, because income is the money you receive from your wages. So just because you have a high income doesn't mean you have a high net worth, or a low income mean you have a low net worth. You can have either way. So how do you determine your net worth? A statement of financial position will do that for you, and that describes an individual or family's financial condition, shows your assets, liabilities, and net worth. You can see it on the right side of this slide right here. It shows your net worth at the end, and it's similar to a balance sheet or a net worth statement. So the 3 components, assets are listed first, then liabilities, and then net worth, and we'll talk about each of those sections. Assets are everything a person owns with monetary value, cash, and the value of your personal possessions. So it's broken down into different types of assets. We have monetary assets first. Those are easily converted to cash, and those are, besides cash, those are your money in your checking and savings, and then any other cash-related items that you have. Tangible assets are personal property that you've bought in to improve your lifestyle. So that could be your home, your car, electronics, anything like that, clothing, are all tangible assets. How do you determine the value of your tangible assets? The market value is what you could realistically sell that asset for today, not what you originally paid. And that's what you list on the statement of financial position. So you might have paid $5 for that necklace, but maybe it's only worth $3 now. You can find the market value on different websites. You can research where you had bought it and what similar items would be going for. So the example, Derek purchased a car for $12,000 2 years ago. The current market value is $8,500, so that is the number he puts on his statement of financial position. Investment assets, the 3rd type of asset, are financial assets purchased that will generate income for you. You hope that they will increase in value. You can sell them at a higher price. So your retirement account, it will go up in value, stocks will go up in value, and anything else that you can think of that increases in value. So then we move to liabilities. Liabilities are a debt or obligation owed to others. So it could be loans for a mortgage, for a car loan, a student loan, balance on a credit card. Those are all examples, and maybe you'll think of some more. In the liabilities section is the amount you owe if you were to pay the amount in full today. So a car loan is $180 per month. If monthly payments continue to be made, $6,300, but if you paid it in full, you'd only have to pay $5,490 because of interest. So on the statement, you would record the $5,490. Liabilities are different than expenses. This chart will kind of show that to you. Liabilities is money you owe to others, and expenses is money spent. The total amount you owe is liabilities, and bills on a regular basis are expenses. So a car loan is a liability, but your monthly payment is an expense. So it is listed differently. Calculating your net worth, then, how do you get that final number? It's assets minus liabilities equals your net worth. And that's your personal financial thermometer. It kind of gives you a number to kind of see your financial temperature, how you're really doing. So determine what amount of net worth you desire, and then you can set goals to reach that amount. How can you increase your net worth? Lots of different ways. Your assets can go up, your liabilities can go down. Both or either or will add to your net worth. And how do you do that? You have to manage your money wisely. So that's how these three lessons will be going together. The first piece of the puzzle is statement of financial position. Income and expense statement comes next, and then your spending plan. What is my position today? How have I managed my money in the past? And what is my future money management plan? Working together, they can help you make your financial decisions and reach your net worth. Your present self impacts your future self, so what you do now will impact your future. So keep your net worth in mind when you make your financial decisions. Before you choose to purchase something or save money or invest, all of those are choices that impact your future. So who's wealthier? If we look at Ian and Mitchell's statement of financial position, Ian on the left, you can see his home is not worth as much as Mitchell's on the right. Retirement is the same, savings is less, and his car is worth less. So he has less assets total, but his liabilities, what he owes, is much lower. He owes $40,000 on his house versus the $80,000 that Mitchell owes. Less in college loans and no automobile or credit card debt. So in the end, Ian's net worth is more, Ian is wealthier. Do you think Ian is making trade-offs to have a higher net worth? Is he spending less money on things like his house and his car? And how could both Ian and Mitchell increase their net worth? Those are things to think about. And if they were going on vacation, how would their statement of financial position guide their decision? When would a person need or want to create a statement of financial position? Once per year is recommended, and it has to be written to be effective. Or there are special times when you're making big decisions, such as buying a house or something like that. You may want to have a financial professional create one, but you can also do one on your own.
So let's meet Tori. Tori is considering purchasing a new pre-owned car, and she would like to know what her net worth is to help her make this decision. So our job is to look at our statement of financial position, which is in Moodle, and you should have Tori's statement of financial position. We're going to fill out the current, and then if she purchased the new car, and see how that would change her net worth. So here's some more about Tori that we need to know. She's 21. She's completing training to be a radiology technician. She has 1 semester of training left. She works part-time to earn $13,000 per year, and she owes $5,000 in student loans that helped pay for her schooling. She owns a car that runs fine, but she just would like an upgrade, and she figures her car right now is worth $3,000. She has $1,000 in her checking account. She keeps $20 in cash in her wallet at all times, and she keeps $2,000 in her savings account for emergencies. So if you're filling out the current section of her sheet, cash on hand would be the $20 that she keeps in her wallet. The $1,000 would be the value of her checking account. $2,000 is in her savings. So then you can add those together. The value of her current car would be the $3,000 in the car section. And then she owes the $5,000 on her student loans from the last slide. She rents a 1-bedroom apartment and owns $1,000 worth of furniture. So that would go in her tangible assets, $1,000. She bought a laptop when she started school. It's only worth $200 now, but then that would again be worth electronics worth. And she owns $1,500 worth of clothes and shoes. So that would be in your clothing section. And invest $20 per month into a retirement account. That account is currently worth $500, so that would be value of her investments is the $500. So here is her current statement. Try to fill it out before you look at the slide. You can pause the video and then check this out. If you added up her total monetary assets right here, it would be $3,020. Her tangible assets are $5,700. Her total investment assets are $500 to give her $9,220, and with her student loan, she owes about her net worth is $4,220. If she trades in her new car, or her car for a new car, it's priced at $12,000. She'd receive $2,000 trade-in for her car, so the purchase would be $10,000, and she will use $1,000 from her emergency savings and take a loan for the remaining $9,000. So think about how that will change her second column here if she purchased a new car, where these numbers would go, and how would it affect her financial position. And again, you can pause it or you can try it right here. Nothing changed up here except for the $1,000 was taken out of savings. The value of the car is $12,000, so that went way up. Her tangible assets went up. Nothing else changed there. Investment assets stayed the same, so here's her total assets. But now she owes a loan on her automobile of $9,000, so that brings her net worth from $4,220 to $3,220. So it will change her net worth by $1,000. And again, this kind of shows that things I just pointed out to you a little bit better. So then, now, what is her current net worth? We just talked about that. What would be her net worth if she purchased the new car? We know it would go down $1,000. And would you recommend she purchase the new car or not? She would like a new car, but it is going to make her net worth go down. So is that a worthwhile investment for her? That is up to you to decide and to Tori to decide. How can she increase her net worth? We've talked about that. She can either increase assets or decrease liabilities or both. And she's chosen to use student loans to help pay for training to become a radiology technician. It lowered her current net worth, but we know that in the end, with more education, people usually make more money, and that can increase her net worth in the long run. By investing in higher education, she's helping to increase her future income earning ability and therefore making it easier to increase her future net worth. So in conclusion, from this whole presentation, statement of financial position is an important money management tool. It shows your net worth. Assets minus your liabilities is your net worth. It's an objective measure of your wealth, your financial thermometer to objectively measure your financial position. And to increase net worth, you'll have to increase assets or decrease liabilities.